Square, led by Jack Dorsey, rebrands to block following Facebook's Meta change. Square's rebranding comes just days after Jack Dorsey resigned as Twitter's CEO. Square, the payments company founded by Twitter Incorporated co-founder Jack Dorsey, announced its name change to Block Incorporated on Wednesday as it looks to expand beyond payments and into new technologies such as blockchain. Square, based in San Francisco, stated that the name had become synonymous with its seller business. Square added that the new name would differentiate the corporate entity from its businesses, a strategy similar to Meta Platforms' rebranding last month. The company stated that there would be no organizational changes and that its various business units, Square, a peer-to-peer payment service, would continue to operate independently. Cash App, a streaming music service Tidal, and its financial services segment focused on Bitcoin will retain their respective brands. Extended trading saw shares rise nearly 1%. The name has a number of connotations for the company. It refers to building blocks, neighborhood blocks, and their local businesses, communities coming together for music-filled block parties, a blockchain, a section of code, and obstacles to overcome, Square said in a statement. The move comes just days after Dorsey resigned as Twitter's CEO. Square Crypto, a team dedicated to advancing Bitcoin within the digital payments giant, will also change its name to Spiral. As of 10 a.m. IST on December 2, the Bitcoin price in India was 45.21 lakh rupee. Under Dorsey's leadership, Square purchased $50 million, approximately 375 crore rupee, worth of Bitcoin prior to the wave of institutional interest that propelled the digital currency's price to record highs this year. In February, it increased its wager by another $170 million, approximately 1,275 crore rupee. Square's also considered developing a hardware wallet for Bitcoin in order to make its custody more accessible. Square said the new name would take effect on or about December 10, but the Square ticker symbol on the New York Stock Exchange would remain unchanged. Top 10 cryptocurrency applications that will gain traction in 2022. Cryptocurrency apps enable investors to trade digital assets from any location and at any time. Following the recent crypto boom, cryptocurrency has become significantly more accessible to the average person. Numerous brokerage firms are now accepting cryptocurrency trades alongside stocks, mutual funds, and other investments. Additionally, the leading cryptocurrency exchanges have simplified the process of exchanging cryptos. Due to the rapid growth of cryptocurrency and the favorable circumstances surrounding it, aspiring crypto investors are looking for efficient and trustworthy investment methods. Cryptocurrency apps enable mobile users to access crypto wallets and market data. The best cryptocurrency exchange app offers a comprehensive service and straightforward trading capabilities. We've compiled a list of the 10 best cryptocurrency exchange apps for 2022 in this article. Gemini is one of the largest cryptocurrency exchanges in the United States, allowing investors to purchase, hold, and sell digital currencies. Its app is user-friendly and supports a diverse range of cryptocurrencies. Additionally, users can convert digital currencies directly from their smartphones or tablets. The Gemini Earn feature, which allows customers to earn interest on their idle cryptocurrency balances, is perhaps the most significant differentiator from competitors. MoneyLion, investing in cryptocurrency can be challenging. As a result, many investors seek simpler solutions before committing to complex investment strategies. MoneyLion is a mobile application that provides access to a variety of services, including cryptocurrency investing. Additionally, it manages customers' funds and requires employers to direct deposit employees' paychecks into the MoneyLion account. Even though this app is relatively new to the market, it offers users lucrative opportunities. Coinbase is one of the world's largest cryptocurrency exchanges, with over 43 million verified users in over 100 countries. Additionally, Coinbase offers a user-friendly mobile application that enables users to buy, sell, and manage cryptocurrencies regardless of their location. The platform enables customers to earn free cryptocurrencies in exchange for educating themselves about newer digital assets. Exodus. In 2015, Exodus was founded. It is a multi-set software wallet application that forgoes the traditional technical outlook in favor of a design-driven approach that enables anyone to easily access crypto wallet services. Exodus enables users to trade major cryptocurrencies such as Bitcoin, Ethereum, and others. The non-custodial functionality of the platform is encrypted on the user's devices, ensuring their privacy, security, and complete control over their wealth. CoinSpot app. CoinSpot is an Australian cryptocurrency exchange that provides a straightforward and elegant mobile experience to its users. Customers can use the app to access all account features, trade efficiently from their extensive coin selection, and view all price charts and crypto market updates. It's an excellent international crypto trading app with some of the most advanced security features and oversight from Blockchain Australia. CoinDCX app. CoinDCX is a slick, easy to use, and incredibly versatile cryptocurrency trading application. It claims to have over 4 million Indian users who trust it with their cryptocurrency investments. The sign-up process is quite straightforward, requiring only the user's mobile phone numbers and email addresses to receive a one-time password, OTP. CoinDCX is backed by several of the industry's most prominent investors, including Coinbase Ventures, Polychain Capital, and BitMEX, to name a few. ZebPay. ZebPay is a well-known cryptocurrency exchange and mobile application in India. It features a simple and easy-to-use interface that enables advanced crypto trading features. Users can send and receive payments via the Bitcoin Lightning Network and benefit from enhanced security features such as the ability to disable all outgoing payments and transfers. CoinMarketCap app. CoinMarketCap's cryptocurrency tracking application is one of the most robust on the market. It enables users to stay informed about crypto news that is tailored to their individual portfolios. Additionally, the app enables investors to track over 35,000 active cryptocurrencies, obtain descriptions, price charts, and exchange rankings, among other features. Interactive Brokers. Interactive Brokers is a comprehensive trading platform that provides affordable access to a vast array of digital assets. Investors can purchase assets from over 135 global markets from the comfort of their own homes or offices. Altrady. Altrady is a cryptocurrency trading application that enables investors to buy and sell cryptocurrency across multiple exchanges from a single platform. This is a significant advantage for investors looking to diversify their portfolios quickly and efficiently. Additionally, Altrady provides investors with a robust set of customization tools and features for building a customized trading platform. A Perth man who lives in his car amasses a fortune of $500,000 through cryptocurrency. For more than a year, the Perth resident lived in his car and took showers at his neighborhood library. However, a risky move altered his fortune dramatically. A Perth FIFO miner who spent a year living in his car has earned a whopping $500,000 from cryptocurrency investments. Max, who requested anonymity due to privacy concerns, learned about speculative coins in 2017. He was convinced it was a scam and spent another 18 months researching until he felt comfortable investing a large portion of his savings in cryptocurrency, primarily Bitcoin and Ethereum. Max, 40, now has $465,000 worth of cryptocurrency to his name several years later. It could easily go to zero or double, the punter explained to news.com.au. He described his decision to invest in cryptocurrency as desperate, but noted that it paid off in the end. The Bitcoin enthusiast intends to cash out when the coins reach predetermined price levels. He has since left his job and purchased a 4-bedroom, 2-bathroom house in Perth for $202,000. Max had always desired homeownership and accumulated savings from his $85,000 annual salary as a fly-in/fly-out worker in Western Australia. However, once he realized crypto could provide him with massive profits, he shifted his strategy. "I was saving fervently for years," he explained. "My initial plan was to save for a down payment on the house, but my savings strategy veered off course. I reasoned, I'll go in 2 directions, for a house and crypto. I was so desperate to change my life." He invested $40,000 in Bitcoin in 2018, when the price of a single coin ranged between $5,000 and $12,000. At the time of press, a single Bitcoin is worth $57,000. He invested in cryptocurrency in dribs and drabs at regular intervals using a dollar-cost averaging strategy. When he noticed that the price of Bitcoin had briefly dipped, he purchased additional units. He also invested in altcoins such as Solana and Luna during this time period. He experimented with Shiba Inu and quickly realized a profit. Max also purchased a small amount of Ethereum in September 2020, when the second largest blockchain was only worth $250. It is now worth approximately $4,500 per coin. According to The Professional, holding was critical. In total, he's recouped his investment 6 times over. Max chose to live in his car for the majority of 2018 and 2019 rather than rent a place to save money for his crypto portfolio. As a FIFO worker, he spent the majority of his time on worksites that provided housing and didn't want to waste his money on a rental property he would be absent from the majority of the time. As a result, he preferred to travel by car whenever he visited Perth. He claimed he survived on Hungry Jack's dinners and showers at local gyms and libraries. The miner stated that he had the confidence to pay a $50,000 deposit on a property in July of last year because he was confident he would not deplete his savings. Rather than that, he had amassed a fortune in his cryptocurrency wallets. He resigned from his job this week and has no immediate plans to return. Tommy Honan, head of corporate partnerships at Australian cryptocurrency exchange SwiftX, stated that Max's windfall would be virtually impossible to replicate on a more traditional stock market with such a small starting investment. "We frequently see individuals make significant gains in crypto, despite making smaller initial investments," he told news.com.au. "It's the same as any other investment, it's extremely market-dependent and market-driven, except for the obvious increase in volatility." He did, however, issue a warning, stating that there was significant risk involved. "It is not uncommon for them coins to move 60% in a single day, that is not possible in equity trading," he explained. He does not simply mean moving upward, he also means decreasing in value. A recent survey of Australian SwiftX traders discovered that 76% earned an average profit of $10,662 over an 18-month period. A further 17% had profited from cryptocurrency to the tune of more than $20,000. The cryptocurrency market is notoriously volatile, and the Reserve Bank of Australia warned investors late last month that they risk holding speculative assets with niche applications that may lose the majority of their value. Tony Richards, the RBA's head of payments, said the value of many cryptocurrencies had soared to $2.63 trillion as a result of fads and a fear of missing out, and could crash if central banks decide to assert control over their monetary systems. I believe there are plausible scenarios in which a number of factors could combine to significantly undermine the current fervor for cryptocurrencies, thereby reversing current speculative demand and unwinding much of the recent price increases, he told the Australian Corporate Treasury Association in November. Here's what happened during November's record-breaking performance by Ethereum, ETH. Institutional investors are becoming more receptive to cryptocurrency investments. The world's second-largest cryptocurrency, with a market capitalization of $540 billion, reached an all-time high of $4,856 on the 10th of November, according to CoinMarketCap data. Ethereum began November trading at $4,314 and ended the month at $4,604. While that was lower than the record set on November 10th, the token ended the month up 6.7%. As of the 30th of November, Ethereum had gained 530% year-to-date, far outpacing Bitcoin's, BTC, year-to-date gain of 100%. What happened in November with Ethereum? Ethereum's price, like that of other leading cryptocurrencies, is benefiting from increased institutional investor interest. The Commonwealth Bank of Australia, ASX, CBA, announced on the 3rd of November that it would become the country's first bank to offer crypto services to its customers. Customers of CommBank will be able to buy, sell, and hold Ether, Bitcoin, Bitcoin Cash, BCH, and Litecoin, LTC, via the bank's app. CBA launched the new crypto service in collaboration with cryptocurrency exchange Gemini and blockchain analysis firm Chainalysis. What else contributes to the high performance? Ethereum's strong performance in November, and indeed throughout the calendar year, is also a result of its real-world application factors, most notably smart contracts. As Darren Abrams, Managing Director of Aus Merchant Investments, a provider of digital currencies, explained to The Motley Fool, Ethereum is a platform that enables the development of a diverse range of decentralized applications. These decentralized applications, or dApps, as they are frequently referred to, are part of a computing revolution dubbed Web 3.0. While Bitcoin is critical to the Web 3.0 movement, it has a limited use case. Ether and other blockchains with smart contracts have an almost infinite number of use cases. While crypto investors have pushed Ether's price higher this year, the token fell short of any safe haven status at the month's end. On the 26th of November, when news of the Omicron COVID variant broke, the token plummeted along with other risk assets. Ethereum fell from $4,550 to $3,960 in a single hour, losing 13%. Bitcoin, meanwhile, suffered a similar fate, falling 10% in the same hour. Bank of America, the cryptocurrency industry has a massive opportunity in the Metaverse. Haim Israel is enthusiastic about the metaverse, believing that it will elevate the cryptocurrency universe to new heights. Haim Israel, a Bank of America strategist, believes the metaverse will open up enormous opportunities for blockchain technology. Additionally, it will encourage the widespread use of digital assets in financial transactions. Nevertheless, he believes that private tokens are too volatile and that stablecoins such as Tether, USDT, and USD Coin, USDC, are more likely to prevail. The metaverse is what will become of us. Haim Israel, Bank of America's managing director and global strategist, recently described the metaverse as the tool that will propel the cryptocurrency industry towards mass adoption if certain conditions are met. I am certain that this is an enormous opportunity. You require the appropriate platforms, which will undoubtedly represent a significant opportunity for the entire ecosystem. Israel also predicted that we will begin using cryptocurrencies as currencies in the metaverse. Existing digital assets, on the other hand, such as Bitcoin, Ether, and the rest, are far too volatile to fulfill this function. As a result, stablecoins are likely to prevail, as they are pegged to fiat currencies or precious metals, which exhibit significantly less volatility. Following that, Israel believes that if cryptocurrencies gain widespread adoption in the metaverse, large technology companies will enter the fray. The term metaverse has gained traction in recent months, particularly since Mark Zuckerberg announced Facebook's rebranding as Meta, a new moniker emphasizing his company's vision. Simply put, the metaverse is a virtual world in which people can engage in activities such as gaming, socializing, working, and even trading and earning crypto assets. The market value of the metaverse could soon approach $1 trillion. According to a report by Grayscale, the metaverse industry could soon reach a value of over $1 trillion. The investment titan noted that the opportunity for the space extends well beyond gaming, touching on industries such as advertising, digital events, social commerce, hardware, and developer/creator monetization. If recent data is accurate, the total market capitalization of Web 3.0 metaverse crypto networks is already approaching $30 billion. The industry, on the other hand, may emerge as a disruptor of Web 3.0, much like Facebook did for Web 2.0. Additionally, the analysis revealed that the number of metaverse wallets had increased tenfold since the start of last year. The number was approximately 50,000 in the final quarter of 2021. What experts believe will happen to Bitcoin, Ethereum, and XRP in the aftermath of the recent crash. The crash wiped billions of dollars from the cryptocurrency market and occurred less than a week after Bitcoin reached a record high of more than $69,000. Earlier this month, the cryptocurrency market took a significant hit, as Bitcoin and other major coins fell by more than 10%. The plunge wiped billions from the cryptocurrency market less than a week after Bitcoin reached a record high of more than $69,000. Bitcoin regained some of its lost value after falling below $60,000, but has since fallen further. It is currently valued at approximately $57,000. This means that Bitcoin has lost approximately 18% of its value over the last 2 weeks. Ethereum, Solana, Ripple, Cardano, Dogecoin, and Shiba Inu have all followed suit, falling by comparable amounts. What caused the cryptocurrency market to crash? Numerous factors are likely to have played a role in the crash. A significant one is the U.S. Securities and Exchange Commission's (SEC) rejection of a spot Bitcoin exchange-traded fund (ETF) which would have pumped billions into the cryptocurrency market. China has also tightened its grip on Bitcoin mining, which contributed to the recent crash earlier this year. China's National Development and Reform Commission announced on Tuesday that it would consider punitive electricity prices for certain cryptocurrency miners in the next stage of its crackdown. This week, the dollar has strengthened against other fiat currencies, but it also appears to be strengthening against cryptocurrencies. This is partly due to rising interest rates, which can help to contain inflation. Ned Segal, Twitter's chief financial officer, also made negative remarks about cryptocurrency, which may have influenced the market. He stated that investing in crypto assets with cash doesn't make sense at the moment. Additionally, there is what has developed into crypto's natural cycle. When asset prices reach record highs, as they did last week, individuals tend to liquidate their holdings, and large sales can result in a decline in value. Predictions for cryptocurrency prices. According to Matthew Dibb, COO and co-founder of Stack Funds, Bitcoin may continue to lose value. We've noticed some larger sales on Bitfinex, as well as the creation of new short positions, he explained. While liquidations have been quite low by historical standards and funding rates are approaching zero, we could see another short-term cool down in BTC as momentum begins to stall. However, a sizable number of analysts remain bullish on cryptocurrencies' long-term prospects. According to Dutch analyst Plan B, previous predictions that Bitcoin would reach $135,000 by December are still in play. The group has previously been successful at forecasting cryptocurrency growth. Ethereum, according to a growing number of analysts, will eventually overtake Bitcoin as the world's largest cryptocurrency. I believe Ether has a very good chance of surpassing Bitcoin. I wouldn't be surprised if it occurred during the cycle, said Rahul Rai, co-head of Market Neutral at Block Tower Capital. It's extremely difficult to predict when this cycle will end. My prediction is for the middle of next year. Ethereum is attempting to power the rails of global finance in the future, which is a much larger market if it succeeds, he added. If it succeeds, and the thesis holds true, the market value will capture trillions of dollars of global activity. Should I consider investing in cryptocurrencies? Individuals invest at their own risk, and British financial authorities have not regulated cryptocurrencies. All cryptocurrency investments involve risk, but meme coins like Shiba Inu are especially volatile, and you should be prepared to lose your entire investment. The Financial Conduct Authority, FCA, warned in January, investing in crypto assets, or investments and lending associated with them, generally entails taking extremely high risks with investors' money. Consumers should be prepared to lose all of their money if they invest in these types of products. Susanna Streeter, Hargreaves Lansdown's senior investment and market analyst, previously explained the risks to I. In addition to being extremely volatile, the majority of cryptocurrencies are unregulated, which adds another layer of uncertainty and leaves investors with little or no protection against fraud, she explained. The FBI and other law enforcement agencies seized $2.3 million in cryptocurrency. The Federal Investigative Agency in the United States, FBI, revealed shortly after November that it had seized over $2.3 million in cryptocurrency. All of that money was seized in connection with the August data breach. A few hours before the first day of December began, the federal agency revealed one of the largest seizures ever made against Alexander Sikarin, who is alleged to be a member of a group of cyber hackers. According to the Investigation Bureau, Sakhalin is a member of the Rival Group that operates between Russia and the United States. Rival is the work of a federal agency. The FBI, one of the country's largest investigative agencies, demonstrates how close it is to apprehending members of the Rival Group. Recently, the federal agency revealed that Alexander Sakhalin possessed such a large sum of money in a Bitcoin-based crypto wallet. According to the agents, Sakhalin held approximately 39.89138522, which equates to more than $2 million at the current token price. Additionally, the Investigation Bureau establishes that the wallet is associated with the exchange Exodus, bolstering the case. While Sakhalin is constantly on the move, they have the potential to snatch a valuable wallet from the market. According to the FBI, the seized wallet and cryptos are being held at the Dallas Town Agency. According to CNN, the agents could hold over $6 million in ransomware transactions involving a Ukrainian individual associated with the Rival Group. The extended news indicates that the FBI investigated and arrested Yaroslav Vasinki for stealing data from over 1,000 companies worldwide in the first week of July. Vasinki collaborated with Yevgeny Polyanin for the same fraudulent network, Rival, according to the investigation. Both defendants face money laundering and fraud charges. The FBI continues its search for Rival members. According to FBI investigations, the Rival Group is responsible for thousands of ransomware attacks. According to the Judicial Department, the criminals stole approximately $200 million in cryptocurrencies, primarily Bitcoin. However, he was unable to apprehend the group's leader, who is currently considered a terrorist. Additionally, investigations indicate that the criminals' modus operandi is to steal data from American businesses and then demand ransom in cryptocurrency. They utilize Bitcoin or other cryptocurrencies to facilitate anonymous transactions between entities located in different countries. All of the ransom money is sent to a cryptocurrency mixer for the purpose of money laundering, and then to a wallet via random nodes. The federal agency believes that a sizable portion of these criminals who utilize cryptocurrencies are based in Russia. Given the near impossibility of extraditing them to the United States to face justice for their crimes. 7s